Welcome to Channel Trading. Let's talk about today's topic. As we normally do, we will go over the channels for today. Today is November 7th, 22nd. And then we go over those channels, as well as then go over one or two additional topics that will further enhance your understanding of what's needed to be done. So, as we talked before, these channels I draw are for 2 minutes. One channel is at the candle that encloses the candle from 3 to 302. The next one is the one that does it, that I draw another channel from 9:30 to 9:32 and from 10:30 to 10:32. Okay. Now, what exactly am I looking for? All these are pivots, VWAP. This is close of yesterday, and this is 21 EMA. Okay. None of these lines mean that big of a deal. My main focus is to be looking at these channels. Okay. So, and of course, I'm looking at these pivots also and the close, because that's where some of the stuff, the interaction of the price with those lines do happen, because they're fixed. So there is no subjectivity around it, as is the concept of channels. There is really nothing subjective about it. I'm drawing fixed lines for the fixed time. And I've done multiple years of data testing on this. So you'll be fairly confident. Listen to what I have to say, go back to any chart, specifically E-mini chart, and then look at what's going on. So I have one from 3 to 302, and I've enclosed it. And the big thing is, in the previous videos, I talked about which candlesticks are potent, or what we need to really look at that would act as trigger candles. So this would show as negative, but then it immediately came back up, and then it really jumped out of the channel. I would not have confidence to enter at that point because of this pivot, so I just wait, come back down. It came back up, and this particular candle gives me the confidence that the channel is acting as support now. And I'll enter one tick above this trigger candle. So I would enter somewhere here, and I would put my stop loss underneath this candle. Okay, I can go underneath this, but because of the way it came down and pulled back up, if it really went back all the way, that means it kind of got rid of all these buyers. So I would rather get out here than here. Okay, so now then I'll write that. Same thing with this channel, right? Let's talk about the 930 channel, 930 to 932 channel. It went back all the way up, and then it got rejected. This is like a insanely big wick if you really look at it compared to what all was happening here. That kind of should give you the first indication that it tried to go up, came back down. So there is a lot of selling going on here. So at this point, I don't know which way I would go. This could be positive. This could be interpreted as positive, because the previous support was here, and then it never went below that. So I would just reserve my judgment there. But then and then I drew this channel, right, as soon as this candle was done. If it breaks this, that means this whole thing is valid. The selling is valid. So I put one tick underneath this candle, and I would wait for it to take me out and then go down. Right? Sorry about that. So with that, I would then write this down, and then I would put the stop one tick above this, or above this channel, and then let it ride. Say all that didn't happen, and then you went back up. As I talked in one of my previous videos, always you're looking at the extremes. After this first thing, you're looking at the extremes. It went in, got rejected at the top. I would enter again here to go down. Same thing here, went in, got rejected, came out of it again. So I would do the same thing all over again. So you could say it went in, got rejected, negative. I would put one tick below this to go short. It never broke it, so I stay away from it. I would only look at one candle next to it for it to immediately show me the reaction, right? If it went up, then that means I would not go short. Okay, so, and then I went back in again. The way it got rejected, I would put one below, nothing happened. Went up, came down, I would put one below, and it showed that it's again negative, so I would put one below and then write this. So as you can see, the whole concept of how I'm going about this should be fairly apparent. What happens here when it goes up? Okay, I totally forgot about this channel, right? The 1030 channel came back up, down, it took the support here. So now I would, since it came, touched, it didn't break, I would put one above this. and then try to take that. But my biggest thing is, as I'm going up, I'm hitting another channel, so I would take my first profits here and then let the other one ride, but then I would closely trail the order, so that way I don't get any losses. This is unique in the sense it came back up, got rejected, but then you can see it is just touching the top channel, and it's at top line of the channel and not breaking below the half. It's not going down. This kind of tells you that it wants to break through. This is true in every scenario, whether you're talking any kind of situation. Like, see, this is one of the pivots. It goes up, comes down, but it's trying to knock it, and that tells you that it is going to go up, right? It came back up. Where it's not going to break through is when it's going to go up, break down, go up, break down. That kind of tells you it's coming back. But if it is constantly getting higher highs as you go into this and it's not coming down after that, that means it's going to break out. The way this is happening, higher highs, higher highs, higher highs, and now it's just going to break through. Okay, so that's the concept for today. For the chart. Hopefully this is helpful to you. I'll go over these kind of charts every single day, so you can draw this on a 2-minute chart and do your own analysis and look through my video end of the day. Hopefully it's helpful to you, what I'm thinking. And I guarantee it, you'll be profitable with minimal losses as you keep learning more and more of this. And in future, I'm going to keep on adding or talking about other concepts within this, such as how many contracts to enter. Just quickly, my concept is to enter with 2 contracts, whether you're going short or long, and you get out of one contract, you take the profit after $1 move or 4 ticks, and the next contract you immediately come to break even and then keep moving, trail stop it so you can get out. Okay, so at a minimum you lock in your profits and then you ride the wave if there is a wave. Otherwise you just get out. Okay, the whole point, as I said before, is to preserve the capital. Don't take major risks. What I'm teaching you, or what I'm talking about here, is absolutely something I worked with. I use this every single day, and there are some minor concepts that we need to go over, but as you keep watching my videos, you'll garner all that info, and eventually, as you keep looking and more at the videos and the charts, I guarantee it, within 30 to 60 charts, you'll easily get the idea of what's going on and how to enter and exit. Okay, hopefully this is helpful. If this is helpful, please subscribe and press the bell icon. And if you can add the comments, that's also helpful for me to see where I'm doing better, where I'm not doing better, and how I can improve.